Money Wise on 938 Live.
A very good evening, 669-11938. You are with me, Keith D'Souza, on MoneyWise. Joining me in the studio this morning, this evening, there goes $10. In the studio this evening is Dennis Ng. He's our investment guru, and he's here on a lifelong mission to make $1 million for 1 million people.
To help 1 million people reach $1 million.
All right.
You made it. I
Okay.
teach you how to make.
Okay, let's go to the phone lines. Yu Cheong, you've been waiting very patiently. Good evening, sir.
Yeah, hi, good evening.
Good evening. Go ahead.
It seems to me that Dennis mentioned that last year his portfolio made 30%, and it seems to me that are you using the way you manage, is it an active portfolio kind of management? May I just ask first?
Is it an active portfolio, Dennis?
It's active in the sense that I take control of my own finances. I make my own decisions. I don't let someone else decide what to do with my money. So that is active. But in actual fact, I'm a weekend investor. So most of the time I'm very busy. Like even if you ask me what the STI closed today, I don't know, because just now I didn't have time to look at the market.
Down about 15 points.
But it's still above 3,000. So what it means that I don't need to spend a lot of time. If that is what it means by active. So I'm a weekend investor, which means typically from Monday to Friday I'm very busy with my work. Only on weekends then I have some time to pick up on my reading and research.
Yu Cheong, does that answer your question, or do you have a supplementary one?
Because I just want to know, like, because you mentioned about the going against the studies, the fundamentals of diversifying and things like that. So I'm curious to know actually what sort of technique or should I mean people like us adopt in order to maximize the returns.
The simplest, of course, talking about techniques, it may take a few days for me to really teach you step by step. But if you want a very simple answer, will be just listen to Warren Buffett, the most successful investor in the whole world, and he says that just be fearful when others are greedy, and be greedy when others are fearful. So last Thursday there was a lot of fear in the markets. If someone have bought something, by now I think the price have gone up 10, 15 or even 20% just within 2 days. So be greedy when others are fearful, and be fearful when others are greedy.
On that note, we are still taking your calls on 669-11938. We are heading for headline news, sports, as well as business. You can keep your calls coming in. MoneyWise will continue.
Time to rejoin Keith D'Souza and his guests, both of whom are making me very rich for entirely different reasons.
That's right. Keith is making Will rich $30 for saying good morning 3 times. Okay.
Does that last one count?
No, it doesn't.
Okay, you're
because
Are you explaining
I
yourself?
was explaining myself. That's right.
All right.
That's right. 669-11938 is the number. We are taking your calls for Dennis Ng, who is in the studio. He's, an independent investor. He's also the founder of HousingLoan.sg, as well as the author of Master Your Personal Finances, the book. And Dennis is kindly consented. If he likes the caller or he likes the question, he's going to give you a signed copy of the book. So keep those calls coming in on 669-11938. Dennis, just before, when we came back, we were listening to the business news, and that was a question that I wanted to ask you. We were talking last year, if you remember. You said Asia was going to be primed for all the hot money that was going to be flowing into it, and it's going to prop up our markets but depress our interest rates. And now we've seen that the hot money is flowing out of Asia. What do you attribute to that?
I think partly because last year the emerging markets, especially Asia, have been doing too well. So the stock markets have gone up a lot. So some of these funds, it's natural for them to want to take profits. So what happened in the last 1-2 months is these guys are taking profits, and they went back to the market that was lagging behind everyone else, and that was US. So in actual fact, in the last 2 months, probably you can notice there was a reversal of fortunes. Asian markets were falling, and US, the Dow Jones, and Nasdaq were all moving up. In actual fact, Dow Jones moved up by about 1,000 points in the last 1-2 months. So I think money will flow out, but by the time, if they have made enough in the US, if they think that US side is probably also quite high, then it may flow back in again, because currently, let's say talk about the PE of SDI, we are only looking at about 12 to 13 times, so it's not very high, because the range of SDI PE is from lowest of 8 to as high as 25. And right now it's about 12 to 13. So in terms of valuations, actually our stocks are not priced very high. They are actually at a very attractive level. So who knows? The money will just flow back. I just don't know when.
Before we go to the phone lines and speak with Mr. Pereira and Alice, last year you were also saying it's time to take a look at third-tier stocks.
Yeah.
The term you used was rubbish stocks.
No. I said penny stocks.
Penny stocks,
But
okay.
I
I heard him
also-
say rubbish.
I heard it, sir. Okay.
No, I said penny stocks, but I warned that among the penny stocks, there are a lot of stocks that are rubbish stocks. So you cannot buy rubbish stocks, because they will just, when they fall by 50% to as high as 95%. So in actual fact, I'm saying avoid rubbish stocks. But the problem is, most of the penny stocks are rubbish stocks. There are only a few gems amongst the rubbish, and it's up to us to go through the rubble to dig out the gems. But if you don't know how to differentiate between the two, then it's all look the same.
One follow-up question before we go to the phone lines. The hit-and-run strategy that you were advocating, do you still think it's a hit-and-run strategy right now?
No.
Take your money and run. Once it goes up, sell it.
No. I mine is not a hit and run strategy. Mine is called market cycle investment strategy. That means I will buy when the market cycle is on the low side, and I will sell when the market cycle turns. So in natural fact, if in the next 2-3 weeks or so, if SDI drop below 3,000 for more than 5 trading days, I will run. That means we may not have a 4,000 point anymore. I will change when the market change. But if let's say we stay above 3,000, and as the markets recover globally, then we are still in line for this possibility of SDI breaching the previous high of 3,009, even going up as high as 4,000 in 2011.
669-11938. We're going to speak with Mr. Pereira right now. Mr. Pereira,
Hello.
good
Yes.
evening.
Good evening to you.
Go ahead, sir.
Yes, I want to ask whether it's time to buy Spider Gold. I see gold going up and up, and when do we buy Spider Gold?
Okay, we won't use the specific name of the gold fund, but we will talk about commodities and how
Thank
you
you.
go about that in just a moment. We need to pay some bills. Thank you for your call, Mr. Pereira.
Money Wise on 938 Live.
669-11938 our number. You are with MoneyWise on 938 Live. I'm Keith D'Souza. I have to ask Dennis, my guest this evening, Mr. Pereira's question before we go to the phone lines once again. Commodities, Dennis. Should everybody be turning their attention to commodities right now, especially the precious metals?
I think if the inflation rate remains high, then probably what will happen is the commodity prices will go up. So in actual fact, the last few weeks, as you can see, during uncertainties, when the unrest in the Middle East, the gold and silver prices have been going up. That said, between gold and silver, I personally think that silver is better than gold, because comparatively, silver is much cheaper. The gold to silver ratio, as in 1 ounce of gold, how much silver can you buy? Traditionally, over the history, it has ranged between about as low as 16 times to 89 times. But the average is 1 gold can buy 13 ounce of silver. But right now, at gold prices at US 1,400 and silver at US $33, the gold silver ratio is at 42 times. So in actual fact, it shows you that probably on a relative terms, silver is more undervalued than gold. So if you want to buy some commodities to hedge against inflation, I think silver will be better than gold.
Mr. Pereira, I hope that answers your question. Let's speak with Alice. She's been waiting patiently. Alice, good morning. Good evening. That's right, $40 for Will. Good evening, Alice. Go ahead.
Yes, good evening. I have 2 questions for Dennis.
Go ahead, ma'am.
Yes, he mentioned that he makes about 30%
Last year, that's right.
Yeah, so can he share with us what he invests in his portfolio? Is it just shares, unit trusts, futures, or what?
That is your first question. What's your
Yes,
second?
the second question is it good to invest in US and Europe market, since he mentioned that one should be greedy when people are fearful?
Okay. Thank you very much, Alice, for your question.
Yeah, okay. So I don't invest in unit trust. I invest directly into stocks. So stocks comprises about 35% of my portfolio. So in actual fact, precious metals probably comprise about 7%. So I'm diversified. I am also invest in land, in real estate, and in other things. So not exactly it's all in stocks, but last year the best performer was actually silver for me, because it went up from $14 where I bought it in 2008 to $30. So there was more than 100% gain.
All right, 669-11938. 669-11938. A very good evening. I'm Keith D'Souza.
I'm hoping you show up every day. Well, this is going to be a daily show.
But remember when Shelley first started?
Indeed.
You see, yes, we all make a transition. But we are going to the phone lines, and we have Mano on the line for Dennis. Mano, good evening.
Yes, good evening. Hi.
I didn't say good morning. I said good evening.
Yes, you did. Yeah.
Yes, go ahead, sir.
Okay. I am actually making a comment, and it's not against any of the panelists there, but since last quarter of last year, I could see that the Asian markets were heading for an overheating period where inflation would head up and so on, and I'm not at all surprised that Dow Jones and the Western markets have done better than Asia and China, and I take a contrarian view. I think that the big picture is actually that the Asian markets and China, we are actually at the tail end of an up cycle, economic and stock market cycle, which actually started as from the low for Singapore, for example, from the low of 2004-05, and we were actually somewhere near the peak. So we cannot look at PEs and so on now, because these are at the peak of the cycle. They will appear to be low because of good earnings. So my view is actually that, for example, gold and silver, also the uptrend is probably over, because once you get a downturn in the economies, you're going to see slackening off of demand for commodities, and commodities are going to cool off as well.
Okay, let's put that to Dennis. Dennis, do you think it's the beginning of the end, perhaps?
I think it's alright for different people to have different views. I don't have a crystal ball. I don't proclaim I can predict the future. As for commodities, it may be true for commodities like copper, whereby the major demand is industrial demand. So as economy slow down, the price will go down. But we are talking about gold and silver. Gold and silver are actually money. Many thousand years ago, it's money. So actually, why are the prices going up in the last few weeks is because of uncertainties, social unrest. So in actual fact, I would say that even if economy slows down, if there's continued unrest in different parts of the world, if there's increased uncertainty, the prices of gold and silver might instead go up, even if industrial demand goes down.
Okay, our phone lines are still going, but we need to end on a positive note. So let's speak with Dennis. Dennis, I know you have a couple of books for us, and we will assign them to some of our callers. I think Mr. Pereira and Alice, I will look for their phone numbers later. But Dennis, to end off this first edition of MoneyWise, like you kicked it off a couple of months ago, do you have, what is in your crystal ball for the Singapore investor at this particular point in time, for this year perhaps? What do you think they should be doing?
I already told you I don't have a crystal ball.
Well, just a little gaze, Dennis. What will you be doing?
Yeah, definitely. Like I mentioned, I'm still bullish on stocks until the trend turns and tells me that I'm wrong. Otherwise, the global market is still in the uptrend. So I still have about 35% of my money in stocks. But at the same time, I have to also say that I'm now raising my cash level as well. Because after all this bull market, there might be a second global financial crisis coming. I'm not sure when would that happen, but I just want to raise my cash level to prepare for a possible second coming of the crisis. In actual fact, we are having the election this year, and probably that shows you that next year may not be such a good year after all.
On that note, Dennis Ng, thank you so much for joining us on MoneyWise this evening. Dennis, of course, is the author of MasterYourPersonalFinances.com, and I'm sure he'll be back on MoneyWise sometime soon. Thank you for all your
I'll
calls
see
this
to it.
morning. Okay, thank you for all your calls this evening.